Dollar versus yuan. A new front in the global economic war? China has opened a new and important front in its ongoing economic competition with the United States, this time with a targeted strike at the heart of the global financial system, the American dollar. Chinese banks are reported to have made large bets against the US currency, hoping to devalue it. These banks are said to have invested more than $100 billion in short positions, expecting that a falling dollar could bring them huge profits. It's a bold move that could further strain the already tense economic relationship between the two superpowers. China's currency strategy is both complex and risky. It relies on so-called currency swaps, a mechanism that allows financial institutions to bet on fluctuations in the US dollar exchange rate. In these swaps, Chinese banks exchange yuan for dollars, maintaining a fixed exchange rate. If the dollar devalues during the contract period, the American partner must pay more yuan, giving the Chinese bank a significant advantage. This practice, known as short-selling the currency, has gained prominence in recent years as Chinese financial institutions increasingly rely on the dollar's weakness. This strategy has led to significant activity in global foreign exchange markets. It's estimated that Chinese state banks have built short positions against the US dollar worth more than $100 billion. This trend will intensify particularly in 2023 and 2024 as banks use currency swaps to stabilize the yuan without risking China's valuable foreign reserves. The targeted move is part of a broader effort to strengthen the yuan, which has been under heavy pressure due to the US Federal Reserve's tightening monetary policy and the slowdown in China's economy. By using these swaps, Chinese banks can profit from currency fluctuations and achieve virtually risk-free returns. Traders on the opposite side of the swaps have reported gains of about 6%, a considerable profit in a volatile market. However, this seemingly harmless strategy also reveals the risks involved in China's aggressive approach. If conditions unexpectedly change and the dollar strengthens, Chinese banks could suffer significant losses. There are reports of losses ranging from $5 to $16 billion. Despite these setbacks, Beijing doesn't seem to be backing down. In fact, it appears to be doubling down on its efforts. The government-supported plan to merge two brokerage firms aims to create a new financial giant valued at around $230 billion, a clear challenge to the American Wall Street. It was President Xi Jinping who initiated a comprehensive restructuring of China's financial sector with the goal of creating top-tier investment banks that can compete with their American counterparts. This move underscores China's long-term strategy to change the global financial order and gradually withdraw from the US market, further intensifying the economic rivalry between the two superpowers. While the United States continues to reduce its dependence on Chinese products and encourages companies to diversify their supply chains, China has launched its own campaign to challenge the Western financial system and weaken the dominance of the US dollar. China's strategy is part of a broader movement known as de-dollarization. In recent years, Beijing has worked to reduce its dependence on the US dollar in international trade and finance. Geopolitical tensions, the desire for economic diversification, and the pursuit of greater financial independence have driven this shift. In March 2024, 52.9% of China's cross-border transactions were conducted in the national currency, the renminbi, RMB, while the share of the US dollar was only 28%. This marks a sharp increase compared to 2010, when the yuan accounted for less than 1% of such transactions. China's de-dollarization efforts are not limited to the domestic market. Internationally, the country has pursued an increasingly aggressive strategy. Countries like Brazil and Argentina have started trading in yuan, illustrating how far China's influence has expanded in global financial markets. At the same time, Beijing has significantly reduced its holdings of US Treasury bonds. In the first quarter of 2024, China sold $533 billion worth of bonds, bringing the total sale since 2021 to about $300 billion. This sell-off was partly aimed at supporting the yuan, which had lost value due to the strong dollar. At the same time, China has significantly increased its gold reserves, which now make up 49% of its total reserves, the highest level since 2015. This trend reflects China's efforts to further diversify its reserves away from the US dollar. The BRICS countries, Brazil, Russia, India, China, and South Africa, play a central role in this process, as they now account for a larger share of global GDP than the G7 countries. The BRICS bloc is working to expand its membership and trade in alternative currencies. This move has been accelerated by geopolitical tensions, especially the sanctions imposed on Russia following its invasion of Ukraine. The BRICS countries have started trading in local currencies, which could weaken the US dollar's role in the long run. In 2023, more than 40 countries, including major oil producers in the Middle East, expressed interest in joining the BRICS bloc. In 2024, 5 countries accepted the invitation, including 3 of the world's largest oil producers: Iran, Saudi Arabia, and the United Arab Emirates (UAE). If international oil trade becomes independent of the dollar, it could radically change the global oil market and put further pressure on the dollar. However, there are also serious challenges. Despite de-dollarization efforts, currency fluctuations and the limited liquidity of non-dollar currencies remain significant obstacles that prevent a full departure from the US dollar. At the same time, BRICS members have begun creating new international financial structures and institutions to reform global trade and reduce dependence on the Western financial system. In short, China's de-dollarization strategy is part of a broader plan to strengthen the economic power of the BRICS countries and other emerging markets. This move could lead to profound changes in the global financial landscape and raise questions about the long-term role of the US dollar as the world's reserve currency. The coming years will be crucial in understanding how the economic balance between China and the United States will develop and what consequences this will have for the world economy. Dear viewers, today we provided a comprehensive overview of the complex geopolitical and economic dynamics of the trade war between China and the USA. Thank you for your support, and we encourage you to share your thoughts in the comments section. What solution do you see for this trade war? How long do you think this conflict will last? Will the USA strengthen its position, or could it end up falling even further? Don't forget to subscribe to the channel and turn on notifications so you don't miss any future updates. Your opinion matters to us, and we look forward to your feedback. Your support is an honor to us. Stay tuned and see you next time.